A very warm welcome to everyone. 5 days after Russia invaded Ukraine, Strategic Treasurer decided to conduct a flash survey of treasurers to ascertain their views on the impact of the Russia-Ukraine conflict. My name is Pushpendra Mehta and I have Greg Jeffrey from Strategic Treasurer with me. Welcome, Greg.
Good afternoon, Push. It's good to be here on our first LinkedIn Live, and not without any issues on streaming, so we're learning.
Many are already feeling the impact. This question I thought was a very pertinent one, which is administered to treasurers, to ask them if they had experienced any direct impact on their business operations or supply chains so far. 2 out of 5, or 44% of respondents, said yes. And if that's 5 days after the war, that means something is going on. Craig, what do you think are the elements within the business operations or supply chains that must have brought this particular question to 2 out of 5 respondents responding the way they did?
Yeah, I think that's a good question. I thank everyone who took this flash survey to provide feedback. I was frankly a little surprised that 44% had already had some type of experience, and I can mostly attribute this push to the sanctions and how the sanctions have unfolded. Russia is the 11th largest economy by some measure, so it's not tiny, but it's certainly not one of the larger ones. So this seemed to be an outsized weighting for such a short-term impact that's already being felt. And so with that push, I think it's more related to all the currency controls, sanctions that are in place. But the expectation is that 44% will grow to 74% in the fairly near term. So they're 3/4 are expecting this impact to be felt. So I think some of that's going to flow from some of these broader issues that we'll talk about as well. So oil prices, things related to food. Russia's a commodity-heavy country that impacts food prices with their fertilizer, materials that go into fertilizer, as well as oil. So I think all of those are factoring into quite a few Treasury people are concerned about the impacts.
Moving further, do you think, as we could see in this slide, 74% of treasurers have said between significant, moderate to minor, that they are going to experience a direct impact in their business operations going forward in the future with supply chains. Do you think this is going to wrench supply chains, exacerbate the ongoing supply chain crisis further?
I'm not sure about all of the supply chain, but certainly fuel costs are going to impact companies broadly because those fuel costs ripple through almost every delivery method and channel they're used. They factor into the cost of goods, so that's a fairly significant impact, in terms of oil. Now, I may be overstating that. Some economists may yell at us for extending that, but we can see it now, several days on from the survey, some of the impact on the price of the pump. But from a supply chain perspective into the food sector, I mentioned urea, things that go into fertilizer. Those are going to impact food. Pretty much everyone we know eats food, whether it's grain related, et cetera. Those will continue to have an impact, certainly on the cost and perhaps on the delivery, but certainly on the cost, we would expect to see that in those areas. With the slide you have up on the screen, it shows 1/6 of those who took the survey believe it'll have no impact. And if you factor in a minor impact, maybe it's not such dire news, at least in these early days, from this direct impact on the supply chain. Cost, that's a different story, I think.
This next question, has management asked for additional information on the potential impact of the conflict? This did surprise me. 49% say no. Does that mean they've not learned from history? Does that mean that we're going to repeat the same mistakes? What is your take on this?
I was surprised that only 51% had looked at additional information or potential impact. But we could factor some of that into maybe someone's not even dealing with Europe. Maybe they're focused on North America, Latin America, or they're isolated to several countries away from the conflict. So I could see how that could be the case where management may or may not be asking for additional input. Anybody operating in that theater, or perhaps dealing with some of the commodities, they're going to be asking those questions. So I think that's where that flows in. But early on, this was only a few days after it, half had already searched this. It'll be good if this conflict continues. We may ask this question and break it out by size or complexity of company. But half our research and see, is this an impact to us? It's good advice to look at how these major issues can impact companies. I mean, that's a key role of Treasury.
If I'd ask you one more question, isn't anticipation an important part of what Treasury does? So if we were to look at 49% vis-a-vis 51%, and yes, you're right, the early days of the war, but we knew that it weren't two minor, countries going to war.
Yeah, I mean that's a great question, Push. This idea of Treasuries looking forward at risks, cash flows, exposure. What do we need to do to help the business thrive and survive? Looking ahead at potential items, even if it's to look ahead and say, this has a very minor potential impact. It's de minimis. That's still worth a look for most organizations. So looking ahead, in terms of what are some of the direct implications, hearing what people are saying, and listening to a lot of different conversations, I think is useful because it may not be the most direct impact that will eventually cause any type of disruption, whatever level of disruption to an individual organization.
You just mentioned preparation, Treasury. Majority are doing something. They have possibly done research, run models to assess the potential impact of this conflict. 59% said that they had monitored or gathered more frequent information, data, or news. 55% had identified risks or exposure, held meetings or discussed this topic. That's also 53%, and research this topic as is expected were 41%. I'd like to ask you, in terms of risks, where 55% talk about identifying risks or exposures, from a risk management perspective, what do you think, what important risk, whether it's currency risks, interest rate risks, or just any other kind of risks that corporates would need to identify to mitigate risks?
Yeah, I mean, commodity price risk is one we already touched on to some extent. Those are the ones that people should be looking at. I mean, some of the geopolitical risks that exist here have a factor. And what are the central banks going to be doing? Already looking at some increases in inflation, potential increase in rates. Those are very significant and increasingly likely situations that we'll see increases there. This section where we ask questions about what are people doing from a monitoring to a modeling perspective, I did think it was interesting that a majority had added monitoring on a more regular basis, getting information and data. That's a really good look ahead perspective, understand what those risks and exposures are. And then we still see that somewhere around half have identified risks or exposures. And so when you identify those, it's what are they? What's the magnitude of those exposures? How can those impact our cash flow, our income, any other types of disruption? And so those are the early steps. And then we see it cascade down to the bottom bar there, where only 1 in 6 have run models or scenarios. So if you've identified that these risks are very de minimis, and they're not likely to cause something serious, you wouldn't necessarily run a model. So we can see some of this data correlating nicely where, about 1/6 have a certain level of concern to their supply chain, their financial position, and that's fairly early days for this significant European theater war that's going on.
If I were to club two of these findings together, which is holding meetings, calls on the topic, as well as identifying risks, do you think some of these meetings were places where they discussed cybersecurity, cyber attacks, potential, employees being the first line of defense, so doing something to beef that up?
Yeah, I think the U.S. federal government has certainly talked about that, the increased threat to cities like New York City, as well as to critically important infrastructure. So this is something that must be addressed. But if you also, I think your question gets to the other point of CISA, the government entity, is now going to be accepting reporting or requiring reporting for certain types of cyber attacks, particularly ransomware. So of those 16 or so critical infrastructure industries, like energy, et cetera, financial services, they have to report any type of ransomware attack within 3 days or 72 hours. And if there's any type of payment, they have to report that within 24 hours. So this is this needs to be part of those conversations, probably has. And you can see the government is looking at some of these non-physical types of attacks that could spill over to other countries, and certainly the U.S. has been looking at that.
This slide, to my mind, is possibly the highlight of the flash survey, and I would request everybody to pay a lot of attention to this particular question that I'm going to ask you with multiple questions here, which is that what were the significant economic or business concerns that treasurers did feel that are going to arise from this conflict? Russia is increasingly becoming an international financial pariah, a commercial outcast, because more and more countries are pulling out of Russia. Given that more companies are likely to do that, you've touched on trade or supply chain impacts. 54% treasurers said it'd be trade or supply chain impacts, cost of energy, inflation, interest rates. Oil prices are linked to inflation. Inflation, interest rates are all dependent on each other. Given all of that and the percentages that you see here, I'd like you to link some of this and tell me, where do you think we are heading with this?
Well, this is where it'd be good to have a true economist, a global economist, to comment on that. But I'll say a few things and push you. And I have had a few conversations on this already. We think about the cost of energy. We're seeing that flow through to the pumps. We've had almost a year of rising prices, and that certainly hasn't slowed down. This is not going to help. And cost of fuel, whether it's gasoline or it's oil, we're quite dependent on, and that has a flow and impacts everything from wages, with rising, with the impact to rising wages and salary, to cost of living, CPI. So that's a very significant impact. I think some of the commodities, which is listed at 40%, still in that significant area. 4 out of 10 have identified this as significant. The cost of commodities across the board is going to add fuel to that fire of rising rates, implications for wages, inflation, and the rest of the economy. I think those are some of the biggest ones that we see. We don't, FX price volatility. Certainly, if you're long in the ruble, you've lost some money, and that there's some elements there. That one provides me with some surprise about why it's that level. That many people are seeing exposure there. And I think some of our later questions may give indication as to why this volatility. There might be more volatility from what's going on, and therefore this is a big concern. To show up with 2 out of 5 Treasury and finance people identifying that. So I think the direct impacts seem quick, and the ripple impacts are still being accounted for, which is reasonable considering treasurers are looking ahead, looking to see relationships and correlations. And this is a good indication that is the case.
In terms of interest rates, do you see central banks around the world tightening monetary policy, increasing interest rates, and therefore the cost of capital going up? How would that impact corporate earnings?
That's a pretty involved question. I think central banks have been looking at raising rates since November, December, particularly the Fed. I don't think there's any indication that that won't happen. I think most people are factoring that in. Will that increase? I think the majority are believing that it's at least 25 basis points, and there's multiple raises expected for this year. So I don't know that I have any other insights in terms of what will happen, but all these pressures point to the same level or higher of interest rates as they did before the invasion.
Russia, as we know, and you alluded to this in the beginning, is a commodity story, largely. Oil and gas, palladium, copper, nickel, metals, grains. So when you touched on the cost of other commodities, given the fact that there was already an ongoing supply chain crisis, and now if Russia decides to retaliate, and that means they stop their exports of commodities, Europe being largely dependent on that, do you think that there is going to be further volatility and further price hikes in commodities?
Well, I think given what's going on, there is going to be further pressure on commodity prices. But I also don't feel really well qualified to talk about all those impacts on the supply chain. Clearly, there's a major disruption. That none of these will help the supply chain, and many of them have a negative potential for the supply chain. So I think that's definitely more pessimistic from what I can see.
In terms of the currency price volatility, companies in the S&P 500, 40% of their revenues come from outside of the US. Does that also mean that while many companies may be investing in dollar-denominated instruments and trying to spruce up the dollar reserves, that's also a double-edged sword there?
The fact that companies have continued to diversify, and if you look at the US, they've grown more international over time. That provides diversification, but with diversification comes exposures to individual economies, currencies in different areas. So I think that is part of the two sides. I've got diversification, which is a good safety factor, but I also am exposed to more risk. So overall, I still think that's a strong play for most companies to be more and more diversified, being mindful of certain geographies and the rule of law and how countries operate.
This is the last slide, has two very important questions. The first one being, have companies encountered more cyber threats since Russia invaded Ukraine? And given the fact that it's 17%, it does not look alarming. But the fact that this survey was administered between March 1st and 3rd, between the 5th and the 7th day, do you think 17% is something that corporates should be worried about?
Yes, I think so. I think for two reasons. One, your peers are worried about this too. The U.S. government, the CISA group, has issued significant warnings both to cities, states, and large organizations, particularly in certain industries. So I was surprised it was 17%, but given all the warnings, I think we need to listen to those warnings and take them very seriously.
Finally, do you believe the conflict will expand or spiral beyond the borders of Ukraine? And that is cyber warfare, including traditional warfare.
Yeah, so we are. This was an area question that I think we found very interesting to see what Treasury people thought of this. We've taken polls throughout the pandemic through the Treasury Coalition about views on medical matters, other items other than Treasury. And so this is definitely outside of our area of expertise to truly comment on it, in a knowledgeable manner. But it certainly was eye-opening that 45% felt that it would expand outside of Ukraine and Russia. Will there be other actions or significant actions? This type of kinetic warfare expanding. You can listen to the news every night. There's many pundits who can talk about that. NATO has Article 5. That's a very significant step to if Russia were to step over that. But you can see what's going on. I would advise people to listen to the pundits, the military generals, and the historians about what that could mean.
If I were to ask you that one last question, focusing on this question, 55% have said no. Are we missing something here? 55% seems a large number for people who say no, this is going to be contained, this is not going to spread.
Yeah, that is. It's a slight majority here. What we're looking at, conflicts. If we look over history, conflicts start in areas and they tend to spill over. So, but not all of them do. There's been a number of wars that have stayed contained into a small area. So this is kind of a mix of sentiments. So I don't know what's going to happen, but it's relatively closely split between those who think it'll be contained just to Russian and Ukraine, and versus those who will see it spill over. There's a number of humanitarian issues going on with indiscriminate bombings. There's just a lot of things that are going on the geopolitical war front, and certainly those are things we can't really comment on particularly well, or from a knowledgeable standpoint. But economically, financially, and from a Treasury perspective, there's a lot to watch and monitor.
Thank you so much, Greg, for enlightening us with your views. For the benefit of everybody who've been a part of this conversation and thereafter, please download the infographic and the survey results. You can visit strategictreasurer.com/conflict and download the infographic and survey results. Thank you.
Thank you, Push.